We're going to keep digging into the numbers here, but we do have some help to go through it with us. We have Dan Morgan joining us from Synovus Trust. He's the VP and Senior Portfolio Manager. Dan, great to have you, as always, on a day like today.
Hi, Jacqueline.
We're just going through the numbers here, and I'm going to get you some more to come, but earnings per share looks like quite the miss for Netflix for the fourth quarter. What do you think about that point?
Yeah, it's interesting, Jacqueline, because it looks like from the numbers so far, it looks like they beat big on new subscribers, right? 7.66 million. Street was looking for 4.85 million, but then they came up a hair short in terms of revenue, and it looks like their earnings per share, like you just said, was a big miss, and that makes me think that maybe there might have been a charge-off or something involved, which caused such a huge differential. What is a little bit disturbing, Jacqueline, is the guidance they gave for the fourth quarter. That number that you gave, I believe, is $2.88 a share. I think the Street was looking for $3.12 on revenue of $8.16 billion for the upcoming first quarter. So not only do you have looks like a miss on the top line and bottom line on this fourth quarter, but also the guidance that they're giving going into the first quarter of 23, at least based on what you've told me so far in terms of earnings per share, looks like a miss. So that's kind of a conundrum. Why did you beat on new subscribers, but then you're missing on the bottom line?
Yeah, we're seeing quite a reaction in the shares in after hours here, Dan. Seeing them up, flickering here, but they were 9 or 8%, but now 7.5% or so there. On the fourth quarter paid memberships, so seeing a total of 230.75 million, and the estimate was 227 million. So a beat there on the subscribers.
Yeah, Jacqueline, so that's what the Street's reacting to right now. They're reacting to the fact that for the fourth quarter, there was a huge beat on net subscribers and a huge beat in regards to the number of total subscribers. Coming to the quarter, for the fourth quarter, the Street was looking for 227 million total subscribers. And as you just mentioned, they did 230 million. That's actually what they were looking for in the first quarter of 23. So, if we kind of piece this together, what it appears to me is that Netflix exceeded in terms of their ads, in terms of new members, but it was at a cost, right? And we know that they're migrating to some different models that we can talk about in terms of the movement towards a basic service with advertising. They also have an initiative to try to capture this 100 million people who they call borrowing the service. They're getting the service for free. They actually have gotten a system in where they prompt them to sign up at a lower price. So I think that's what we're seeing in these numbers, Jacqueline. We're actually seeing pretty good gains in terms of new subscribers, but the average revenue that they're getting per subscriber is falling. The basic ad service is only $6.99 a month. So I'm not quite sure what the dollar price is of this new password sharing offer, but I'm assuming it's much lower than their traditional services. So I think that's what we're seeing. They're getting those new subscribers, but they're not collecting as much top line and profit from those newer people that are coming on board.
I wonder what you make of the leadership change. So Reed Hastings moving to executive chair, and then there will be co-CEOs. So Greg Peters and Ted Sarandos will become the co-CEOs. What do you think of those changes?
I'm not an expert in management of companies that I follow, Jacqueline, unfortunately, but I mean, just, it could be, like we say, kind of an inflection point for Netflix, where all of a sudden the model's changing a little bit, right? It used to be go out there, spend tons of money, create a lot of content. Don't worry that you have negative cash flow. Don't worry that you're accruing debt. Just add as many subscribers as you can, right? And now the model is kind of shifting more towards, well, let's kind of keep an eye on this huge database of subscribers that we have. How can we monetize them? They're not going to spend, as far as increases in content, as much as they have in the past. I think their streaming obligation commitment going into next year is only about $23 billion. It's going to be flat for 24. So That's what I'm starting to think, Jacqueline, that maybe some of these changes that you're seeing may be a response to this kind of inflection point that we're going through with Netflix in terms of, what's the future holding and what's the direction. Obviously a lot different than it was, let's say, 3 or 4 years ago.
Yeah, what do you think about the content that Netflix has been producing, or at least the money that it needs to put into producing that content, and just how sustainable that will be in the longer term?
Well, content is the key, Jacqueline. I mean, obviously, the way Netflix really gets people hooked is on these shows, right? I personally don't watch them, but I mean, I know about them. But that's really what gets you hooked, because the other content they bring is movies that are produced by other studios, right? So it's that self-made stuff that's so important for them, that helps them compete against, let's say, the likes of Disney. Disney reported on the third quarter, I think 14.5 million new subscribers, but they lost $1.5 billion. So, Netflix, again, continues to move forward, capturing their subscribers through their internal content that they produce, and not relying on these outside studios to bring in content. And that's really the key for them to continue to maintain that 230 million subscribers that they have.
Really interesting to get your thoughts, Dan, and interesting to watch the reaction in the stock price. Now it's up about 5.5% in after hours, so paring back some of those gains a bit. But like the company said in its result, it said that 2022 was a tough year, including for the stock. I'm adding that in. But they say with a bumpy start, but a brighter finish. So it might be the way that investors are interpreting it as well.
Yeah, you're right, Jacqueline. Again, the reaction is going to be on that subscriber number, because it was such a big beat on both total subscribers and the growth that they saw in the fourth quarter. And that was a really big issue, Jacqueline. I know you and I have done quite a few kind of reactions to Netflix over the last couple quarters. And I can remember a couple quarters they had negative subscriber growth.
Right.
Last quarter, they only did a little bit over 2 million subscribers. So, even as we look at these numbers, I think that's why the street's applauding, even though they're missing on these, top line and EPS numbers for the fourth quarter and the first quarter guidance. Again, I think that everybody's just kind of applauding that. Well, it looks like what they're doing is starting to work. They're starting to get that new subscriber growth number back up again, and that's encouraging going forward for this new model that we have. Can they monetize these subscribers through an ad-based model like we would see with Twitter and Snap and Facebook, right? That's all about monetization of your user base, right? So now Netflix is turning into one of them.